Good day, trading people. You're welcome to the main FX YouTube channel, the channel where we trade forex and stock indices using primarily ICT concepts as well as my approach to these concepts. You're welcome once again. Alright, going into this video, we're going to be discussing today reducing trading losses. Now, I know you've all been in a situation where you opened the markets, took an entry, and this entry was in line with your trading setup and strategy, but then it reversed against you. Or it moved a little bit in your direction before reversing against you and hitting your stop loss. Now, when these losses occur, we usually see these losses as probability losses, right? Losses that are inevitable and losses that we can't necessarily control. However, what if I was able to tell you that you can control these losses? What if I told you that with this factor that we are going to be discussing today, you can drastically reduce the number of probability losses you take? What if I told you guys that 9 out of 10 times that price hits your stop loss, it's because of this factor that we're about to discuss? Well, today we're going to be discussing why your A setups are reversing against you and hitting your stop loss. And by the end of this video, you should be able and ready to add this factor to your trading strategy and to your checklist of things you look out for first before taking your entries. Now, how exactly are we going to go about discussing this topic in this video? The first thing we're going to do is to walk through a live trading execution, the rationale behind the trade setup. We're going to watch the trade play out, and we're going to discuss together the reason why that trade didn't work out and why my stop loss was hit and what we can learn from that trading day. Alright, if you're ready, let's jump right into the live trading example. Okay guys, so we're currently about to trade the PM session on stock indices. Okay, this is after the sell-off in the 3 a.m. sell bullets session. So currently what we see going on in SPX and including the other stock indices is a bearish breakout structure to the downside. So the price broke structure to the downside in the 9:30 a.m. session, which is marked by this orange rectangle, while the purple rectangle indicates the PM session. So my motivation for this trade is basically this SNT divergence occurring with SPX breaking structure to the upside, while Nasdaq, is failing to break structure to the upside. So that made me willing to sell when price filled the fair value gap left behind by the SMT divergence.
Now, the major reason I even decided to take this entry in the first place was because of this fair value gap right here. Yeah, so I anticipated that price intended for the day to rather for this session as the PM session to further reach into the fair value gap that it failed to fully fill on SPX, and my perspective was that need to fill that fair value gap would also result in the other stock indices like the Nasdaq, which I traded earlier in the AM session, to also fall, to the downside. So that was my mindset in deciding to enter this trade. Okay, now at some point I became so attached with the idea that price was definitely going to trade bearish into that fair value gap that I decided to even double down on the trade and decided to take another entry. So this is me trying to stack another entry. Now, so with this move to the downside, I was able to, this little move, I was able to break even on the initial trade and on the initial trade entry, allowing me just one entry for this trade idea. Now, this is where price just starts showing me that it's done, completely done with the bearish moves for the day. So price starts reversing to hit my stop loss, and I'm sitting here looking at, the market about to take my money, and it's a feeling that never gets, you never get used to it, but it's warranted, and we'll discuss reasons why, this trade didn't pan out as expected, and what insights we can gain from this loss today. Okay, so what we can see in price action here is that the previous session before this trading session, it was the 3 a.m. silver bullet session. So that was, basically in the last video, we went through together this silver bullet sell from the 3 a.m. So that sell led us to a bearish move to the downside, clearing out all the liquidity, all the sell side liquidity. Sell side liquidity was basically, so this fair value gap here, this blue rectangle, as well as these lows and the fair value gap, or even the balanced price range here. So that's those two fair value gaps at the left and at the right. So price didn't need to go all the way to these lows down here for it to have for us to have gone a second time in the next session. That was the PM session. And so the point here is that that initial 3 a.m. bearish move was enough to invalidate any further trades to the downside, because the bearish move had satisfactorily taken out all the liquidity that was available for the day. And so that was why, that's the major reason the price wasn't willing any longer to go, to deliver bearishness, in the PM session. So I challenge you to, in your own trading, look out for these events. So whenever you see a target, maybe a fair value gap or certain lows that you're aiming for price to hit for the day. When price does hit those targets, look at what happens in the following session after that, and you would find out that price is usually not willing to go further in that direction. Even if price does, it would be a very short scalp. It wouldn't surpass the lows or the highs that the previous session that took out liquidity made. Okay, so what we see today here is that after the targets hit to the downside, price just consolidated. We can see a consolidation here. Price just consolidated throughout till the end of the day. And so that's a lesson that we can glean from today's trading day. Alright, thank you guys so much for watching the MainFX YouTube channel. Hope you enjoyed the video and hope you learned something. I'd love to see you in the next one. Have a good rest of the day.